ટાટા ટેકના નંબર્સ બાદ ખાસી પોઝિટિવ એક્શન આ સ્ટોકમાં હતી. તો આજે કંપનીના મેનેજમેન્ટ સાથે પરિણામ પર ચર્ચા કરીએ. આપની કંપનીમાં આપણી સાથે જોડાઈ રહ્યા છે ટાટા ટેકના CEO અને MD વોરેન હેરિસ. Warren, welcome to the show. Good afternoon. And first we'll start with the results are what you have exactly indicated to the analyst in the call. This was because of some delays and deals or certain ramp-ups, or still you are sounding confident? What about the rest of the year? What makes you feel way?
Well, we entered the fiscal year with a great deal of confidence. Last year had been somewhat of a muted year, in part because of the US elections and the EV incentives running off in Europe, and so there was a lot of latent investment decisions that we were expecting to intersect with in the April timeframe, and we'd had very good discussions with our customers in different parts of the world in Q4. Of course, at the beginning of April, on April the 2nd, Mr. Trump announced the tariff challenge to many of the US trading partners, and that prompted many of our customers to further delay the decisions on new products. What we've seen during the course of the first quarter, however, is increased confidence that common sense will prevail, and we've seen a number of the decisions that we were expecting in April come through in late May and June, as evidenced by the number of large deals that we announced as part of our earnings report yesterday. So we are not only confident about Q2 and the second half of the year, we've got an order book now that supports that confidence.
Right. So, Warren, do you expect double digits growth in financial year 26, or you can say early teens or single digits? Some indications on this.
Well, we don't provide guidance, and I think it's really still too early for us to say. There is still some uncertainty out there. The trade negotiations have not really completed outside of the US and the UK deal. So there's still some ways to go before we have certainty. But certainly from a Tata Technologies perspective, Q2 is likely to be a good quarter for us. And if we can lay the foundation in Q2, that should give us a platform to really finish the year in H2 quite well. So whether that relates to single-digit growth or double-digit growth, I think we'll have a much better visibility on that come the August and September timeframe.
Okay, so now on JLR, what about JLR account? How is it doing, and has it stabilized?
Yeah, we've seen JLR continue to go from strength to strength. JLR at the end of last year celebrated becoming debt-free for the first time in the last, I think, 10 years, and so they have shored up their balance sheet. They've got a very aggressive product plan, and I think we're well positioned to support the deployment of that. So we're very pleased with the fact that we're involved at JLR throughout the value chain, not just on the product side, but also in terms of deploying technology to support the way in which they conceive, develop, and build and sell their products within the markets that they target.
Right. So, Mr. Warren, next will be on growth. Couple of quarters of negative growth. So you think that Q2 onwards you will get back to growing, as number of brokerages and especially the bearish ones are talking about degrowth for this year for the company. Do you ruling out these possibilities?
Yeah, we'll certainly return to growth in the second quarter, and we expect to build upon that in Q3 and Q4. So I think that the commentary that's coming from some of the analysts, I think, is somewhat overstated, because the visibility and the order book that we've got certainly gives us confidence that the markets are improving, and that will see not just ourselves, but the entire sector return to a growth trajectory.
Right. Then what about the margins for the year on the whole? What should be the margin trajectory be?
Well, our first priority is margin preservation. We finished the year last year with 18.2% margins. We will be targeting, looking to at least achieve that this year. But as I said, with growth, we'll have a better visibility on that in the August and September timeframe. Our North Star in terms of margins continues to be more than 20. And I think over the next couple of years, we will have the market environment around which we will achieve that. We've demonstrated great resilience as far as margins are concerned, despite the muted sentiment within the market over the last 3 quarters. And as soon as the environment improves, we expect to not only progress from a top line perspective, but also in terms of our margins and profitability.
Right. Mr. Warren, next, for my understanding, you are confident about retaining full year margins. So the 200 basis point dip we have seen in first quarter margins, was it entirely due to certain deals ramp up, or which is not happening, delays are there in deal? Just want to understand, is there any change in pricing? Your thoughts on wage hike, because a lot of IT companies had not been committed yet for the wage hike. What about you?
The primary reason for the reduction in margins is that we've retained the capacity in the system in order to be able to discharge the growth that we're anticipating in the remaining part of the year. So there's no pricing pressure that has driven margin reduction. There's no structural impact that we've had to grapple with. We just made a strategic decision to maintain a level of headcount that will support the growth that we are expecting to come in Q2 and beyond. As far as salary increments are concerned, we're continuing to monitor the market. We're committed to reward the team members that we've got in different parts of the world. And over the next month or 6 weeks, we'll certainly make some decisions in terms of quantum increments and also the timing of when we deploy that.
Right. So now it's EU versus US markets. Which looks better? US market has been hit by tariff. Just over the weekend, US is threatening EU for 30% tariff. So if we see it's significantly higher. So how confident are you that whatever you are saying will hold longer going forward?
I think when the initial tariff announcement was made in April, there was a great deal of shock and concern. I think as the trade negotiations have continued, despite the posturing that is positioned on both sides, I think there's increasing confidence that agreements will be reached that will be palatable to both sides. And that's really informing the decision of our customers to deploy capital and to start investment in new products. So clearly, the tariff situation is generating a level of uncertainty, but the uncertainty that we saw at the beginning of the fiscal year is really starting to dissipate. And again, I think everybody's coming to terms with what will likely be the new reality, and they're adjusting and refining and recalibrating their business plans accordingly.
Okay, so Mr. Warren, next and last, obviously not on numbers, but as we have seen Tesla driving in Mumbai, India, do you see this as a positive with the EV space hitting up, also going to be Kia launch a little while later? How do you look at that?
Yeah, I think that's a great question, and we're really excited about the fact that Tesla are coming here, because I think it validates 2 things. One, the strength of the Indian market and the importance of the Indian market in the context of the global automotive sector. But I think it also reinforces the opportunity for alternative propulsion systems being an increasingly important part of the mix here in India. The fact that a heavyweight like Tesla is coming into India, I think, is a demonstration of their confidence in the EV sector within this region. And given our credentials in terms of understanding the Indian market and our ability to be able to deploy full electric vehicles for companies that are looking to share the responsibility for development with partners like ourselves, it represents a very important and positive step in the context of the opportunities that we expect to harvest going forward.
Okay, Mr. Warren, thank you for taking time out for us, and best wishes for coming quarter. Thank you again.